Jameel Ahmad. He's the Director of Investment Strategy at the German-founded and public-listed fintech investment company NAGA. Jameel, thanks for joining us on the program. Let's talk about the UK GDP first. In July, it was more than 18% higher than its low in April, but that surely is good news for investors on one hand, but it is still almost 12% below the pre-pandemic levels seen in February. So how is this moving markets today?
So, Rachel, thank you so much. There's both good and bad in this number. And eventually, what it really has done essentially is put a bandage over a wound that has been blood for the British pound over the past week in the market. So what we saw was a 6.6% increase in economic activity in July, which is thumbs up. It's slightly below expectations, but still it helps provide some optimism that the UK economy will be able to have a V-shaped recovery from the pandemic. Construction sector was up by 17%, but the services sector, which is the major component of UK GDP, that underwhelmed somewhat. So I think that we still have a lot of uncertainties coming for the UK economy. The trifle of mess that is Brexit, and we're going to speak about this, I'm sure. The fear of the second wave and the pandemic, what could happen there, along with the government stimulus measures specifically for the job sector and the UK coming to an end soon. But there is some good news for the UK economy, and it's helped the sterling at least stabilize from what has been a really horrific week to watch recently.
Yeah, and you mentioned Brexit. Indeed, I do want to ask you about that. Trade talks aren't looking good as the UK is brushing off that ultimatum from Brussels. How are investors seeing all of this?
Rachel, Brexit, it's the stain on an investor's shirt that you just cannot get rid of. No matter how much you try, it just keeps coming back and keeps coming back and keeps coming back. The last week has seen so much. It's been quite embarrassing from many standpoints. There's been a lot of confusion, and all it shows is a return to recent history of uncertainty with Brexit. We've had the pound that has fallen from just below 1.35 on September the 1st to as low as 1.27 yesterday. That's a sharp drop in just over a week. And if these uncertainties continue, and if the goalposts continue to be moved, which it appears from some sides that that's going to be the case, the pound could fall as low as 120 and soon. So really somebody needs to steer the ship and bring some sort of wisdom prevails to the table. Otherwise, this is going to be a mess for the next month, because that's really what's caused this problem. We had a trade deal that we were hoping that could be set until the end of 2020. It now seems to have a deadline unofficially of the middle of October. That's the one from the UK. Of course, this could be theatrics, it could be pantomime, it could be hard negotiations, but investors are concerned over this uncertainty.
Yeah, a lot of uncertainty there. Speaking of uncertainty, let's talk about tech stocks in the U.S. We've seen a lot of volatility since last week. How long do you think this whipsaw action is going to go on?
It can continue. I look at this as a balloon that has some of the air being let out of it. It's not a balloon that's about to pop. We see a correction in the market actually being healthy, because tech valuations got extremely distorted. You had tremendous increases in 2020 for the likes of Apple, Tesla, and so on. So what we do think is that we're going to see a little bit more volatility, but there are some good signs that a lack of volatility in emerging market currencies, the USD GPY, which has been actually pretty strictly in a brief range this week, it shows that the market is not tremendously concerned that this is a market freefall that could fall off the cliff, and it appears to be a correction. But of course, investors have to watch this.
All right, we'll leave it there. Jameel Ahmad, thank you.